I want to do a quick compare and contrast between SoFi and Prosper. Of course, we are speaking about personal loans, and a lot of folks are kind of confused when it comes to SoFi personal loans versus Prosper personal loans because those two companies are fintechs, and those fintechs are really kicking ass big time when it comes to a personal loan. So we want to really compare and contrast those two loans today. So here are the lenders I want you to think about. First of all, I want to talk about SoFi. So when you think about SoFi, first of all, SoFi actually is called is the shortcut for social finance. It's one of the best lenders on the market. Okay, and the cool thing about SoFi is that they are very customer centric. So their customer service is really fantastic. They really want you as a borrower to actually succeed. So that's kind of cool. Okay, and so SoFi also is very generous in terms of personal loans because can you believe that they actually will grant you a loan from $5,000 all the way to $100,000. So that's kind of cool. $5,000 to $100,000. And so the average FICO score is around 600, even though FICO can go as low as a 550. So that's kind of cool. And if you go with SoFi, you definitely want to actually have auto pay. In other words, they will deduct your payments automatically every month. Because if you go for auto pay, basically you are getting 0.25 discount. So that's kind of cool. Okay. And so SoFi is really like a community. So as a matter of fact, they call their customers members. So that's really good. And when you have a loan through SoFi, you have also, in addition to the loan, you have access to a variety of benefits. Okay, not just the money that you're getting from SoFi, but you're getting also, for instance, you are part of. You can actually tap into the company's unemployment protection program. So that's kind of cool in terms of extra benefit. I mean, when you think about it, not a lot of lenders care about their borrowers that much, but SoFi does. Okay, and this actually speaks truth to the company's social finance sort of inclination. So that's really good from not only from like what I like to call from a responsibility point of view, but also from an accountability point of view. So that's kind of cool. And SoFi is really good. So think about 5,000 to 100,000. FICO score around 600 average, and SoFi will ask you for employment like proof of revenue, whether you have a job or you have an inheritance. You gotta show how you're gonna repay the loan. And by the way, the maturity, the repayment window is actually goes from 2 to 7 years. So how do you qualify for a SoFi personal loan this year? I mean, let's have a conversation about that. Now, the thing is that SoFi will qualify you if you are able to show, let's say, income. Let's say you have a job for at least that really generates revenue for at least $1,000 a month. Okay, so $1,000 minimum gross salary every month, and average FICO score, as I said earlier, 600. Even though the higher the better. I mean, this just like any other lender, right? So if you have the higher your FICO score, that's really great. And SoFi also pays attention a lot to CUR and also a DTI. So CUR, your credit utilization ratio, and DTI, debt to income ratio. So the thing is that CUR, they'll let you in around 40%, even though 30%, 33% is actually better. And same thing for DTI. DTI, they'll go a little higher, it's like around 42%. So this is kind of cool. And also, SoFi wants to know the reason for the loan. I mean, this is an important element for them in terms of qualification. Okay, so basically, if you want to really get a SoFi personal loan this year, you must be the age of majority in your state. And for most states, it's around 18 years old. But for states such as Alabama, is 19 years old. You are either a U.S. citizen, eligible permanent resident, or non-permanent resident alien, okay? And you have to reside in a state where SoFi is authorized to actually lend, and you must have a proof of income. So that's an important element. So one thing I want to say here is that there are reasons why you might be disqualified for a personal loan at SoFi. For instance, if you have a lack of sufficient relevant installment account information, in other words, you don't have a checking account or savings account, you don't have anything. You got to have some kind of banking relationship. If the ratio of balance to limit on bank revolving or other revolving accounts is too high, so that really speaks to your DTI and CUR ratio. So if those are too high, SoFi is not going to approve you. If you have if you, let's say, have some kind of a negative info on your mortgage information, that could be problematic. Also, if if the revolving balance on your credit cards on your open credit cards is also too high. So this could also be a little problematic for SoFi to really accept you. If you are thinking about SoFi, one thing for sure, if you let's just make sure that you have income and you have employments. Okay, income $12,000 gross income every year, so that's about $1,000 every month. Gross income, not net income, gross income, and you also like overall, when you think about $1,000 per month, of course, that revenue has to be in relationship with the loan amount that you are getting. Remember, with SoFi, the minimum you can get is $5,000, and the maximum you can get is $100,000. So if you, for instance, if you get approved for, let's say, a $50,000 revenue, you have to be, revenue for a loan of $50,000, you have to be able to meet the monthly installment. Okay, and you got to have enough revenue to justify that you could actually qualify for that. So, and also one thing you need to think is that SoFi wants you to be employed for at least the last 90 days. So if you want to really increase your chances of actually qualify for a SoFi personal loan, you got to have a proof of employment for 90 days, or an offer of employment to start within the next 90 days. So SoFi is comfortable if you don't have a job yet, but if you can show them that you have an offer letter that states they listen, you can actually start real fast. So this is really cool. And so overall, SoFi is pretty generous, because when you compare and contrast SoFi to, let's say, PenFed or Discover, you can see that the amount that SoFi is actually granting you, those amounts are way higher, because PenFed, for instance, is giving you a maximum of $50,000, whereas Discover is giving you a maximum of $40,000. So this is where SoFi is giving you $100,000. Okay, and SoFi also has a large array of use of loan proceeds. You can use the loan for debt consolidation, medical bills, home repairs, funeral expenses, auto repairs, wedding expenses, vehicle financing. So this is kind of cool. And so because not all lenders actually will give you this sort of possibility. And even better, you can pre-qualify for a SoFi loan, as a matter of fact, because SoFi has a useful tool to provide simple rates and terms online, so you can pre-qualify through a soft pull process for a SoFi loan. So this is kind of cool. So I just spoke to you about SoFi. Now let's just talk about Prosper. So when you think about Prosper, first of all, you see the amounts are lower, the loan amount. So SoFi gives you $5,000 to $100,000. Prosper gives you $2,000 to $50,000. So this is what it is. And with the Prosper, you are able to qualify if your FICO score is as low as 500. So you can see that from a FICO score, from a FICO score standpoint, Prosper can go a little lower. SoFi is around 600, 550, 575, but Prosper goes a little lower. Okay, so the cool thing is that you have to really understand that but the thing is, the Prosper actually started 20 years ago, so that's really good because it shows a lot of resilience. Okay, and you can pre-qualify also for a Prosper loan, so that's kind of cool. You can check what rate you qualify for without harming your credit score. And so with Prosper, joint personal loans are available. Okay, now the thing is, Prosper is not a direct lender. It's kind of similar to SoFi, as a matter of fact. Okay, Prosper does not originate loan itself, but instead buys loans originated by a Utah-based web bank. Okay, and Prosper uses funds from investors to purchase loans from web bank, and investors receive a share of borrower payments. So this is actually the business model. Now, Prosper does charge an origination fee on all loans, and the origination fee actually goes from 2% all the way to 10%, which means what? It means that if you qualify for a $10,000 Prosper loan, you will, and the origination fee is 10%, you would actually get $9,000, because 10% of 10,000, in other words, $1,000, actually goes to the origination fee fund that Prosper really maintains. So this is something to really think about. Is actually for them to compensate their staff for actually originating the loan and everything. And so when you think about Prosper, think about a loan that allows you to have access to multiple loan offers. Okay, so you can actually choose. You can pick and choose in terms of maturity date, in terms of the loan amount also. And with Prosper, you can get funded in within a day. Totally possible. Within 24 hours, you can get your cash. That's really fun. That's really fantastic. So how do you qualify for a Prosper personal loan? Now, Prosper actually wants you to have a FICO score as low as 500. I've said this before. And Prosper wants you to have a minimum income, like a monthly salary. It can be weekly, it can be bi-weekly, but when you actually total everything on a monthly basis, Prosper wants you to have at least $1,500 gross income. Okay, so $1,500. You can see here that the Prosper loan amount, minimum loan amount, is higher than what SoFi is asking for. So SoFi is asking for $1,000, and Prosper is asking for $1,500. Okay, so if you don't have a job, you must have some form of income, and Prosper may not actually offer loans to those who have filed for bankruptcy within the last 12 months. So this is kind of cool. This is kind of restrictive, but hey, listen, it is what it is. And one thing I need to say also is that basically Prosper, even if you have an offer of employment, Prosper is not going to honor it. It's kind of similar, unlike SoFi. Okay, Prosper wants you to have a job, or wants you to have an active job, be actively employed. Otherwise, they're not really giving you a loan. Okay, but the thing is that, hey, listen, you're not risking anything, because you can always go through the process and see what you might qualify for, if anything. Okay, and so Prosper will look at your DTI ratio also. So DTI ratio, they want you to be around 38%. So Prosper wants you to be around 38% average. But the lower the better. You know what DTI, with CUR, the lower the better. So if you have a low CUR, if you have a low DTI, that just means that your financial position is pretty strong, and Prosper loves that. Okay, and but Prosper actually is available in all 50 states, so it doesn't matter where you are at. You could qualify for a Prosper loan, not a problem. Okay, but please just make sure that you do not apply for a Prosper loan if you have filed for bankruptcy in the past year. They actually look at that. The past year, the past 12 months, if you have filed for bankruptcy, Prosper is not going to honor you as a potential borrower. So, but this is actually a criterion that SoFi doesn't have. But hey, listen, it is what it is. So how do you actually apply for a Prosper loan? Well, Prosper loans are pretty straightforward. You go to the website, and you actually you go through the soft pull process. So what will happen here is that Prosper allows you to go through the process and see how much you could qualify for. And this is kind of cool because you're not actually risking anything. You're not really having any sort of risk. Everything is being taken care of. That's really fantastic. Okay, you have all kinds of possible alternatives. So that's really good, and so we love that a lot. And one thing I want to say is that you actually, if you are an individual borrower, you can apply for a loan online or by phone. But if you are an applicant with a co-borrower, you cannot apply by phone. Okay, if you have a co-borrower with you, you're gonna have to actually apply online or through the app. By the way, through the mobile app. And so Prosper will typically review your application within 5 business days. Usually it's around 2 days. They say 5 days, but on average, based on our investigations, around 2 days, 2 to 3 days. And you can actually, so every loan application receives a Prosper rating ranging from AAA to HR that really reflects the risk of investing in that loan. Remember, as I said a little earlier, Prosper actually buys loans from web bank and sells those loans to investors. Okay. That's how the company makes money. And the company has been doing a great job at that because they're still here. It's been 20 years. It's been like they've been doing this for 20 years. It's just fantastic. They've been doing a great job. Okay. And one thing I want to say also is that Prosper, in terms of customer service, fantastic also because they are able to help you. Now, Prosper is not going to go as far as thinking of the borrowers as members of a community because Prosper doesn't have the social finance sort of inclination that SoFi has, but Prosper still does have a great customer service. Okay, and so one thing you need to understand is that Prosper will make sure that they work out a solution with you if you have a problem making payments on the loans, because they want to get paid, and they want their investors to get paid as well. But one thing for sure, overall, customer service is great. If you go on rating website like Trustpilot or Triple B, the ratings are overall positive there. So when you actually, I've actually talked to you about SoFi versus Prosper, right? And so the question is, which one should you go for really this year? Which personal loan should you really go for? Well, the thing is that I want to first talk to you about the loan application process. Before you make a decision, you have to really ask yourself, what kind of loan are you looking for? Because before you choose a lender anyway, you have to check your credit, because you can see that Prosper, for instance, goes a little lower in terms of minimum credit score than SoFi. So what is your credit score first? Because that will really will determine whether or not you can qualify for a SoFi versus Prosper. And also, one thing you want to do is you want to calculate your loan payments, so that you can really ask yourself if you could actually if you could afford what SoFi or what Prosper is actually asking you to pay every single month. Because the whole thing is that there has to be a correlation between your inflows and outflows, right? Your cash inflows and cash outflows. So the thing is, of course, SoFi wants you to have a minimum monthly income of $1,000 gross. So Prosper wants you to have $1,500. But based on the loan amount that you have to really you have to see whether or not you can make the payments every single month. So that's an important element to think about, especially from a long run perspective. Why? Because SoFi, for instance, has a repayment window of 7 years, whereas Prosper has a repayment window of 5 years. So, of course, the longer the repayment window, the better. I mean, the lower the payments, but the better from a borrower perspective. But you still have to make those payments, because otherwise, the bank is going to report your defaults to the credit bureaus. Okay. But the thing is, if you want to, whether you want to go for SoFi versus Prosper, always go through the pre-qualification process. Okay. Pre-qualification process is cool because you're not losing anything. You're not really losing. You're not really harming your credit score. But at least you have a clear idea what's possible out there in terms of loan amounts and how much you could qualify for. That way, you can actually once you actually go through the process, you provide your proof of income. You verify your address. You identify yourself, and you get approved. At least you know how much you could expect. You know how much you could actually qualify for. And you know also actually the terms and conditions of the loans that you just got. So this is important to think about. So what's the selection here? SoFi versus Prosper. Which one should you go for? Well, our answer is very simple. We would go with SoFi. The reason is that SoFi, number one, is very generous, $5,000 to $100,000. SoFi actually has this sort of a social inclination towards its borrowers, which it calls members. So that's kind of cool. You have the unemployment sort of protection. That's really good. And also you have a longer repayment window. So this is kind of cool because SoFi compared to Prosper gives you a 2,000 to a 50,000. Wants you to repay within 5 years and doesn't have this sort of a social inclination really that SoFi does have. So in closing arguments into this conversation, I spoke to you about SoFi versus Prosper. I give you the lenders, the loan application, the selection, and now the closing arguments. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.